Hello everybody and welcome to Financial Conversations with Brian. I just wanted to jump on here just for a few minutes and give one little financial lesson that it's so simple and so easy to grasp, but a lot of people miss it. So I felt like, hey, I think I need to get on here today and just give a little bit of an explanation about assets and liabilities and the difference between the two, okay? And why the rich buy assets and avoid liabilities, or buy assets to pay for their liabilities, okay? So, it was so simple, I was able to get it on this one dry erase board. I'm not sure if you can see that. Alright, assets versus liabilities. The thing that defines an asset or a liability is the simple word cash flow. It's the most important word in business and in personal finance. It's the direction that the money is going. Okay? So real simple, an asset puts money in your pocket, a liability takes money out of your pocket. Okay? So an asset can be anything like, say, a stock that pays a dividend currently. Not a 401k where you don't get the income to spend. I'm not a real big fan of the 401k. I know that's going to crush a lot of people. I think it's called the 401,000 for a reason. I think it's because how many years it takes you to get there. 401,000. 401k. Something that financial institutions invented to keep money flowing to them. Okay, so anyway, asset could be a rental property that after all the expenses provides an income. Okay, income, expense, asset, liability. It could be anything else. We've talked about it before, like maybe a book royalty. You write a book, do the work one time, income flows in. Could be interest on a bank account. Or in today's world, a more exotic crypto, where you might earn 9% interest. Okay? Money flows up here as income. Now, liability is real simple. If it takes money out of your pocket, it's a liability. Car payment, okay, automobiles, most of the time is a liability, because if you have a car payment and you pay the money to the bank, the money's flowing out of your pocket and into the bank's pocket. You're paying them interest. So it's their asset and your liability. See, there's always two sides to every coin. Cars also, there's maintenance involved in them, tires, oil changes, things like that. Those are all expenses. Money flows out. Real simple. Now, a car could be it could be an asset if you use it for business. Let's say you do DoorDash or Instacart or something like that, then now all of a sudden it becomes an asset because it's something that you're using to make money. As long as it makes more money than it cost you, then it would be considered an asset. Okay? The college education could be considered an asset because in the future this could be higher. However, this channel is not really about jobs. We're trying to get out of those. But anyway, you got the picture. Now, the big one on this one, and this is the one that gets everybody fired up, and you'll have people disagree and argue over it, and this house. Is your home a liability or an asset? And that depends on this word right here. Cash flow. Okay. Now, if you're over here and you say you've got a home mortgage, okay, and you're paying the bank money every single month and interest, that home is a liability. It takes money out of your pocket. Okay? Another way to look at these assets and liabilities is if you stop working today, would it feed you or eat you? And if it feeds you, asset. If it eats you, liability. Okay, now home can be either one. It can be an asset, it could be a liability. If you have it as a rental property, either with a mortgage or without a mortgage, I currently have one without a mortgage, but that cash flow becomes an income. Okay? Alright. Now, here's where a lot of people, there's a lot of arguments on this. Some people say, well, I own my home free and clear. So it's not a liability. Still could be a liability. Still could be an asset. And then it comes to this word right here. So even if your home's paid for, you still have to have property tax payments, homeowner's insurance, things break, heat pumps, toilets need to be repaired, blah, blah, blah. The list goes on and on. When you pay for those things, expense, out the door, right? Liability. Now, one of the things that I did here at this house compared to my previous home, currently this house is still a liability even though there's no mortgage on it. But this little area where I'm sitting right now is in a mother-in-law suite. And eventually it will be turned into a future asset. Because if I rent out this mother-in-law suite, it will cover all of the liabilities associated with this property. It pay for the property taxes, homeowner's insurance, even water, and there's no power, very little power because I've got solar panels. Okay, so I think you got the picture here. You can turn a home into asset or liability, and it all comes down to this word right here. Now, a lot of people say, well, a home goes up in value and you can sell it at an increased amount over what you pay for it. Well, that's true. And at that time, when you actually sell for more than what you pay for it, then it could become, an asset because you sold it for more than what you pay for it. Okay? Now, the one thing that I think I mentioned in my last video, there's things that I consider assets that don't exactly put money in your pocket, but they decrease the money going out of the pocket. I consider those assets. Okay, the last video I did was real simple. Anybody can afford. That's why I did that. It's so cheap, $10 for the little low flow shower head. If it decreases your expense, then I consider that that's not a liability. That's an asset. I mean, you did pay out of your pocket $10 for it, but it returned, a positive because that liability of the water bill, the expense of it, it went down. So this went down. This little box got smaller. See, that's the difference between the rich, poor, and the middle class, okay? The rich, this column is huge. And this column is very little. Okay? The poor basically don't have this at all. They only have expenses. No assets, no liabilities. Their credit may be bad. They may not even be able to get a loan for anything. So the poor just look like this. And then the middle class, this is very, very tiny. The asset column. Liabilities are long. Middle class probably owes for their house, car, maybe 2 cars. All kinds of things that trappings of life. RVs, add a swimming pool, blah, blah, blah. Increasing liability if they borrow for it. Now, the rich do have pools and things like that, but The truly rich will buy an asset to pay for the liability, okay? That's what they do. If they say, hey, I want the Porsche Boxster, okay? All right, let's go here and let's buy a storage unit. It's going to give me $2,000 a month cash flow, and then I'll borrow the money for this car over here at $1,000 a month or whatever it is, and that asset more than covers the liability. See how that is? Real simple. Like I said, this I just want to jump on here today. Real simple concept, but I think it's extremely important for everybody to know. Figure out what your assets and liabilities are. The only thing you have to do to become wealthy and wealthier is buy more of these and cut these back. Pay these off. Reduce these. Okay? Just buy these. Create these. See, that's the thing too, is you don't have to buy every asset. Some assets are created in your mind. Like I said earlier, like writing a book or something like that. You can create assets with your mind. The old saying, it takes money to make money, that's a lie. Whoever told you that didn't know what they were talking about. It doesn't take money to make money. It takes an idea to make money. Okay? So, I think that's that for today. If you haven't already, subscribe, hit the like button, hit the bell notification so you can be notified of any future videos. And let me know if you like little videos like this. This little diagram came from a book called Rich Dad, Poor Dad. One of the most important books of financial literacy you can come across. And that's the thing, financial literacy. Learn simple concepts. The more little concepts like this you know, the more you'll be armed. The more you're armed, the more you'll be able to fight the good fight. Okay, you have it in you. It's all up here. Because my old saying I always say in every video, as a man thinks in his heart, so is he. Okay? You guys have a blessed day, and we'll talk to you soon.